Hello, hello, hello. Let me see. Still adjusting the camera, still making setup changes. There we go. There we go. Okay, how's everyone doing this morning? First live stream from the new house, so we shall see how this goes. I did a test one yesterday afternoon. There might be a slight echo. I still got to figure that out based off the room I'm in. But I hope the camera and sound is good. Good morning, Jacob. Good morning, John. Good morning, Patrick. Hello, Bullstripe Cheetah. So, again, people still trickling in, but not a lot of people jumping in the chat yet. Sterling's not going to be here. He has a prior engagement, so we'll just have to go through the numbers ourselves. Good morning, Ted. Again, thank you everybody for tuning in. Hope everybody had a good day yesterday. We had inflation numbers come out today, and whoa, they were hot. Thanks, Ted. Thank you for that feedback. Again, this sound and camera feedback is important. I'm going to still be making adjustments. I got to put some dimmers on in this room. It's just an on off with the lights in the ceiling. So we'll be working on that over the next few days and weeks. Big news this morning, inflation rate. Inflation rate. Uh, Much hotter than expected. Good morning, David. Thank you for tuning in. I really appreciate everybody. A little audio is a little boomy. Thank you. That's what I need. Let's see now. Audio. I'm getting some reverberation because of this new. Let me try this. Let me give me some feedback off if I go off this other microphone. And let me see here. Audio monitor. Let me see. Sorry about this. I'll probably have to play with that in over the next little bit, but thank you for that feedback. I don't want to mess up the live stream this morning, but I did switch to a different microphone. So I'm just looking for a couple other things. Sorry for the delay here. 1 second. All right, we will deal with that later. All right. So all right, nice and clear right now. Nice and clear now. All right, that's better. We'll stick with that in the short term. Thank you again for the feedback. All right, Bullstrike, thank you. Patrick says that's good. That's great. All right, we'll stick with this for the time being. The room is gone. What do you mean the room is gone? Hello, Charles. Don't touch it from there. Oh. Hi, I know time the market beats time the market, but would you consider it to be a good time to do my monthly ETF buy or just wait for tomorrow? Well, I think we're going to go into now. Recently, it's been over the last few years. It's just been buy like the spiders or the Qs or the futures, something indexed because of all the way the mega caps have been trading. I think timing the market is going to get critical over the next 5 to 10 years. Timing the market is going to make a big comeback. Now, I can't tell, I don't know anybody's specific portfolio. That's why I do the market analysis and let people decide again. But I think timing is going to be more important. I think we are going to get a bigger pullback at some point. This is not it. And then the people who constantly buy every dip are going to feel a lot of pain. So would I be just going all in based off this pullback today, based off the higher inflation print? Well, that's up to you, but personally, I would not be diving in with everything I had after this pullback. All right. Oh, the echo, that's what's gone. Thank you. Thank you, Bullstrike. Good morning, Royal Palms. All right, we had the core inflation rate coming out of 0.4% versus consensus of 0.3, and prior was 0.2. Year over year coming in at 3.3 versus 3.1 expected. Inflation rate headline number coming in at 0.5 versus 0.3, and prior was 0.4. And inflation rate on the headline number year over year is back at a 3 handle. Now, Nick Timross also, if you're not following him on X, you probably should. Where's his 3 and 6 month rates? If I might have lost that here, where is it? Yeah, here we go. Core CPI 6 month annualized rate ticked up to 3.7, and the 3-month annualized rate with 3.8. This is what I've been talking about. I thought inflation would be sticky, and it is sticky still. So we've lost the two handle, and they cut a little too fast. So we'll see. But we got second day of Powell testimony. For the crude traders, we have the EIA numbers. And then we got Bostic speaking, so we'll have to see, and Waller speaking, but Waller's after the close. Now remember, tomorrow we get the PPI numbers. So far, it's pretty red day today. Mega caps are taking it. Intel is holding up pretty nicely. Tesla, after getting whacked yesterday, remember I said I'm expecting that to go back to the 200 simple. Getting a little bounce there, but overall the market very, very red. You can see all sectors are red this morning with utilities, which are very interest rate sensitive. That's why when rates start climbing, utilities generally get hit the hardest. Then you have technology and industrials. The Fed watch. Now some measures have the first cut getting pushed out till December. This is now pushed out till October based off the CME Fed watch tool, but it's definitely been pushed out. First cut in October, and it could get pushed to December, really based off where this is headed. So remember, we had 3 cuts, then 2 cuts, then 1 cut, then back to 2 cuts, and now it's back to 1 cut, and that 1 cut's getting pushed farther and farther out based off the latest data. Fear and greed was in neutral mode, going to be back to fear mode based off this open Shiller PE above 38. Again, this market is very, very expensive. In terms of earnings, there wasn't really anything major this morning. After the open, go back and do a little earnings research. After close, you have Reddit, which is in nosebleed territory. Absolute nosebleed territory. Would not personally, even if it beats earnings, would not be chasing it higher here. Still has, unless it starts printing money and actually earning money. But there's not much. Cisco after close also. Tomorrow, John Deere is going to be the biggie I'm going to be looking at. All right. Good morning, Daniel. Good morning, Anissa. Who else? Well, date, again, I'd focus, if you're going to short-term trade, I'd focus on, there's going to be lots of volatility under Trump. So if you structure your trades based off volatility, I think it could go pretty well. Well, Sterling, I was texting with him this morning, and he pointed out, not normally when I cover, but the 2-year note futures, he had a double top in play, and it hit the second target today. I just wanted to point that out thanks to Sterling. Here's your reaction off the S&P, currently down 1.1%, coming in very close to my key support level at 6,016. If we do break below there, I'm looking at about 59.90 to 6,000 as the next key support. We sliced through the prior minor support level. You can see just plummeting right here. So on any bounce, 60.50. 60.50 is going to be very key resistance. If we did get through there, if we did get back through 60.50, 60.65. Now, overall, in the bigger picture, we are still in a huge consolidation. I mean, look, we're trading back at the opening price from January 7th. I mean, and if you see this, we've gone a whole lot of nowhere since the big election rally. We've gone up a little, we've dipped a little up, dipped a little lower, but we're in this big consolidation. So is there any fantastic long-term buy setup? No. Is there any fantastic short-term sell setup? No. Everything's day-to-day at this point now. We still do have the potential massive double top that's in play, but we're a far way off from triggering it. Now, weekly cycles are still headed down. Daily cycles are headed down. So would I be an aggressive buyer at this point? No, especially without any bottoming pattern. I'd be watching to see if we get any bounce plays closer to 60.16. If that does not hold, then around closer to that 59.90 to 6K. NASDAQ, again, cycles down on the daily, cycles going over on the weekly. You can see the selling pressure. I talked on Monday. We obviously did not have a live stream yesterday, but I said kept watching the top of this channel line, which was been very key resistance area, and I had 21,867, which I listed that on Monday, and that held up very nicely yesterday also. So slicing through the first level key support, this 21,590 area. So that's now resistance. The key level of support is back at 21.4. That's my major level of support. So again, I don't recommend a lot of people day trade. I think more people should learn to swing trade and position trade. Okay, but it's still, even if you're swing trading and position trading, doing the analysis every day, you know, because when key things are broken, like if this NASDAQ triggers the massive double top, would I be even a swing trade aggressive buyer? No, I'd be watching for the much bigger pullback before pulling a trigger on any buys. The Dow still has a daily double top in place, but we have the 50 EMA in the way. So going to be watching, that's going to be my key support level should the Dow continue down about 44,125. And triggering the double top would be 43,965. The Russell slicing through key resistance. Remember, the Russell had a potential double bottom, which was very sloppy, but has never confirmed or triggered it. If it heads down again, this will be off the table. Still trying to hold the 200, but if that goes, the next key area to watch for is right around 2217 to 2220. The VIX moving up nicely. As I said, the VIX, however you want to trade the volatility, we just cover however you want to trade volatility. We covered a VIX in this one just for a consistent point of reference. But again, when volatility drops down, based off the Trump play, I'd be looking, especially if you get topping plays, be looking to structure trades with long volatility. The DAX just continues to climb higher through the next cluster. Again, the potential double top that never confirmed or triggered is off the table. So that's all done right now. And what's the next key levels? We're going to move to the next key minor pausing bar, which wasn't super strong because this violated, but it says what we have. 22,314 and 22,572 to 590 cluster area. So the DAX is still in trailing mode. Sorry, my sister's in town helping with the move and they're taking the dogs out. I'm in the new office with the glass door see-through, so I had to wave to them as they were going with the dogs for a walk. The notes. Now, based off of principle that Bob and I have taught in the past, the walk-away trend line for the sloppy inverse head and shoulders was triggered yesterday, along with we had the little double top play I talked about. I talked about this on the test live stream also, which spaced out there and then also closed below the walk-away trend line. So if you're using that concept, this trade would be over. Okay, and watching for this to pull back now substantially. We're trading even below a key support level at 108.10. The yields closed above the walkaway trend line for the sloppy horizontal head and shoulders. And now the yields are climbing again, coming into very key resistance for this 4.65 area. If it does blast through there, and remember, this trade came down between the 50 and the 62.5, which is a major support area, and now we've rotated back up. So in the short term, the key level to watch is 4.65, 4.653 to be exact. To close above that shifts it back to a possibly 4.75 harmonic level with the 87.5. So yields could keep climbing. Sorry, just having a little of my tea. My throat's a little dry. By the way, the two-year never triggered the very sloppy head and shoulders, where the 10-year did, the 2-year did not. And I found that interesting also. Now the dollar index, we had a double bottom. that was triggered back on Friday. Hit the first key levels doing a little mini double top pattern, pulling back, but did not invalidate the double bottom pattern. And again, hitting the first target for the third time, but really struggling to get through this 108 level. That's what's turning into very key level for the dollar index, 108. So that's what I'll be watching. And if we can break through 108, the final target on the little mini double bottom is 108.40, but then I'll be focusing on 108.64 is the key level. Now, if this stalls out and the dollar turns lower again, which, you know, Trump announced tariffs on aluminum and steel taking, I think it's March 4th. Now, unless those get delayed again, that could also strengthen the dollar. Crude, we had a little mini double bottom that ran up, so that one's done. No key topping pattern yet. What I'm looking at crude is to see how the level of 72 holds on this pullback. Remember, we have the EIA numbers this morning. If that level does not hold, then I'll be watching for a much stronger bottoming pattern coming back down closer to the 200. Not much with natty gas after stalling out just below the first target, but still not invalidated. The key invalidation for the remaining of the lower trade would be a close above 3.634. Gold, little bounce into the rotation zone. I mentioned yesterday on the test live stream for very short-term traders, I'd be paying attention to yesterday's low. We dipped below it and now back above it. Still watching that. Again, gold is still in a very strong uptrend without a significant topping pattern yet. But going to be watching with this secondary reaction to see how it reacts and maybe setting up a stronger topping pattern. Other than that, the trend is still up for gold. With the next key levels I'm looking at, we bounced straight off this harmonic, by the way. If I move these two levels, you see the harmonic was 29.68, and the high yesterday, and I'm not trying to nail things exactly, but the high was 29.68 and a half. So, was not surprised to see a little pause there, but if that blows through that level, and this right now, this potential double top is off the table, the larger one. So, we're going to see. Now let's do the forward harmonics on here to see where it gives us our clusters. Because unless something really rallies today, we're going to get a pausing bar. So intermediate level of 3,015, and then the cluster area is 3,063 to 3,086. How big of a dip? Well, again, if you're planning on holding long term, I'd be watching for one of the bigger patterns to trigger. Like if one of the bigger double tops trigger, I'd be waiting for it to hit some of those key levels. At least. What else do we have? The yen, we had a little mini, let me get to the chart. Okay, we had the little mini double bottom that was confirmed, triggered yesterday, and hitting all the targets. Now we're against a very key trend line. Very key trend line. Very key resistance. So I'm going to be watching how we react around these levels. But I have to see it really start getting above this 155 level. 155 is going to be very key to resume yen weakness. Other than that, we'll be watching for possibly a pullback and a stronger pattern. Bitcoin finally breaking some key support, but still, if we break down, remember this 96,650, we started to break down below it yesterday with the key close. Now we're following through, but the real key breakdown is 91,920, and triggering the massive double top would be at 89K on a weekly closing basis, and the rotation zone would be out of the way. I am very cautious with Bitcoin right now unless it can start regaining around 99,000. What else do we have? The spiders. Again, your major support going into this week is going to be about 597.50. The minor support, which we're below, yes, was Friday's low, which we're now below, the 600. So I'd be looking at 600 on any rally. And then if it does bounce back, if you get all the dip buyers coming in, it would be a gap fill to 605.31. Again, as I said, the major support I'm looking at is this 597 area. The Qs, I was paying attention to Friday's low, 522.19. We're trading 522.35, so that's still going to hold. If we break through that, I'm paying attention to a return to the closer to the 50 area at 518, the 50 EMA at 518.20. Other key stuff, Tesla breaking down. Again, I talked about watching this. Once we start breaking below key support, watch for the return over the next few weeks to the 200 simple and the 62.5. The next key level, though, is right around this 314 area. You have a little prior support base and the 50% harmonic. So we're arguing oversold, so I would not be surprised to see a bounce at some point, but there's no key pattern today. What else? What else? Holding up today was Intel, but still caught in a range. Now this is not a double bottom because it's a triple bottom right here. The only thing is if Intel can really start climbing on a closing basis above 22 and follow through, it's trading right there at that level. It's got to close above there. It's into a clear path move with a potential target of around 23.65. And then the next target I'd be looking at is the 200. Now in the bigger picture with Intel, this is turned into there's no more double bottom there, but it is trying to base down here. So I'd be paying attention in the shorter term. Again, that 22 level, and then if we follow through above there, where the 200 symbol's declining. All right. We're ranging since November, Coco. That's about it. I have to go take care of some stuff again. I'm still in the midst of a move, so thank you for tuning in, but everything should be roughly back to normal, so we shouldn't have any disruptions in the live streams. And so I will talk to everyone tomorrow. Have a wonderful trading day. Again, if you're trying to buy a dip today or something, at least wait for some kind of buy setup. And here, this is just not a strong buy setup just yet. Okay, so I'm going to be, first thing I'm going to be watching is on any rally how we react to the declining 15-minute rotation zone. With that, I shall talk to everyone tomorrow. Have a wonderful day. Bye for now.